Hi, Steve Sosnick here with an Interactive Brokers midday market update for Wednesday, October 14th, 2020. We're looking at the markets meandering, really trying to find a direction. The time we're taping this, we've seen them bounce up, no real follow through, down, no real follow through. A couple bounces here and there. We'll see if a direction develops throughout the day. But as of now, we're sort of seeing just trendless trading, a little bit of back and forth. Doesn't surprise me that we would be seeing a bit of consolidation still of Monday's move because yesterday we saw some pullback, but nothing substantial. You would expect to see after a sharp rally that we saw on Monday, of the type we saw on Monday, that we would pull back a little bit or at least move sideways, and that seems to be what we're doing at the moment. We are beginning earnings season. Another one comes around. Certain sign of the the calendar changing. We saw J.P. Morgan and Citigroup report yesterday, and today we saw Goldman Sachs, Bank of America, among others, reporting today. I traded banks for many years and was the lead specialist in some of the largest banks, basically the names that I just mentioned, plus a lot of others. On their options. And here's the one thing that I've learned with bank earnings is, unfortunately, with the bank earnings, no matter what happens, you can always find something wrong with them, even when they're good. So J.P. Morgan yesterday, the numbers look great, but and they took lower loan loss provisions. That's a good thing. The bank's balance sheet is better than they thought, and their outlook is better than they thought. But lo and behold, that becomes a low quality beat. All right, and so JP Morgan doesn't really get any bounce from that. Goldman Sachs opened higher today on blowing out their numbers. And now they're sort of drifting, as we're taping this now, they're basically drifting around to unchanged. Why? Because they had a great quarter trading. Unfortunately, as a trader at a publicly traded company, I learned the hard way that analysts don't particularly love trading earnings when they apply to the bottom line, because the thought is no matter how good you are, no matter how consistent your numbers, they're considered low quality compared to the organic growth of the institution. So despite the fact that the traders at Goldman had a blowout quarter, that's largely being discounted. And the analysts go to look at trend growth. I'm sorry, but if you consistently do something on a regular basis, that is the trend, but so be it. Can't change the street's mind. And so we see Goldman about unchanged. And Bank of America, on the other hand, which did not report as good top and bottom line numbers compared to some of the rosiest estimates, it's selling off a little bit. So banks are usually, in some ways, a terrible bellwether for earnings season. They come out first, but you can't draw a lot of trends into them. I guess you could, in the sense that if the banks came out and said, things are particularly great or particularly horrible in terms of their lending markets, in terms of the economy. If you saw people like Jamie Dimon and Brian Moynihan come out and say the economy is particularly wonderful or particularly horrible, which they didn't. But if they said something of that nature, you could draw something into that going forward into earnings season, because of course the biggest banks talk to the biggest companies and small companies too. And they have a pretty good pulse on where the economy is going and where the demand for credit is going. That's their business. And we didn't really get a ton out of that this time. So I wouldn't draw much into it. I guess maybe the one thing would be that the markets kind of took the bank earnings as glass half empty when they could have taken them as glass half full. I suspect that's more of a function of the market's level than anything else. That with markets, with the S&P, and we haven't even gotten to NASDAQ yet, but with the S&P trading striking distance of all-time highs, I think markets may be a bit more judicious in terms of what they're looking for. Also, I do think that last quarter, the expectations were set so low that so many companies were able to beat them. I wonder, whether there's been some reset in terms of expectations. So what can you take away from this? I wish I could tell you there was some great takeaway from this. There isn't from bank earnings, at least what we've seen so far. What I do tend to focus on is the stuff I've written about over the past couple of days, and I urge you to read that if you hadn't. Things about option skews in the mega cap NDX stocks showing the same sort of extreme bullishness that we saw at the end of August, early September. Um, things like the put-call ratio trading at very, very low levels, which tend to indicate an emphasis on greed rather than fear, which, and to quote the famous movie line, greed is good, but only to a point, because ultimately markets do need to find some balance between fear and greed, and markets that get too far in one direction or another tend to move in the opposite direction at some point. What I found yesterday doing some work was extreme low levels of the put-call ratio tended to presage a downdraft by few weeks to a few months. And we first started to see the excessively low levels of the put-call ratio appear in June. So we're now 4 months away. It's potentially on the early side compared to what we saw, let's say, in 99 or 2006, 2007. But those didn't end well. So it's time possibly to maybe recalibrate your balance between fear and greed. But if you're going to do that, bank earnings didn't give you a clear signal one way or the other, and I think we'll have to wait until some more. I was going to say more representative companies, but the banks are extraordinarily representative companies of the economy. But the way they make money is so fluky. It's not a great read. Let's wait and see where some of the other companies come out, and we're going to start to get that over the coming weeks. Have a good one, everybody. Bye-bye.